So we have a bit of a history with this in that we were one of the first firms in the US to file for a Bitcoin ETF. And when we were rejected by the SEC, at that time we were a small sort of startup company, and we didn't have the resources. I didn't want to, be in a fight with the regulator for potentially many years. So we decided to go in a different direction and build out, the products that you see today. What we did do, however, was we decided to focus on crypto and/or blockchain.
Welcome to Only the Savvy, where we highlight innovative voices shaping the future of finance. Today, I'm joined by Will Rhind, founder and CEO of GraniteShares, an ETF provider that's not only celebrating recent milestones, but also pushing the boundaries of what exchange-traded funds can do. GraniteShares has been making headlines with its recent Yield Boost launch, exploring emerging technologies and responding directly to what investors want in these unpredictable markets. Will, thanks for being here with us today.
Thank you for having me, Nicole. It's a pleasure.
Absolutely. Before getting started, I wanted to know, before GraniteShares began, what inspired you to create a company that would bring a fresh approach to the ETF market?
Well, I think that for me, I started in the ETF business or asset management, but focusing on ETFs in the early 2000s. And so I was lucky enough to be involved in the team that was doing ETFs really for the first time in the world. So I guess right place, right time. And I followed the product basically throughout my career. So I started, when I was young, working on ETFs when, like I said, no one else was doing that. And then followed it to a startup company that became quite successful, which was sold to another big company. And then ultimately with the goal of founding my own company, which I managed to do 7 years ago in founding GraniteShares. So I've been in the industry for a while, and have started working on the product, and then was involved in a startup, and then finally had the sort of industry knowledge, if you will, to go out and start my own business.
Absolutely. Your early motivations is definitely helping our audience understand what sets GraniteShares apart. So getting into that, GraniteShares recently had a bell ringing event. Could you explain the significance of this moment and how it reflects the progress you've made so far?
Yeah, no, absolutely. So we had a bell ringing, which is similar to what you see if you're familiar with IPOs, where somebody rings the closing bell or the opening bell of a major exchange. For us, that was at NASDAQ. And so we did that in celebration of launching our new income or high yield based ETF, Yield Boost. So that's the brand name that we're using. And that's a high income ETF that provides income through option strategies. But it was really a celebration where we were lucky enough where it's actually quite rare to get the bell ringing coinciding with the actual listings. That really only happens with a true IPO. And of course, the ETF is an IPO in the sense that you're listing on the stock exchange for the first time. But that was a really good event and a kind of good way to bring people together and to cap off 2024, really.
Absolutely. Such an exciting event. Would you be able to give us some details on what Yield Boost is and why it's important for the potential investors as well?
Yeah, so Yield Boost, first and foremost, is an income ETF or a yield product. And it generates a high level of yield from investing in options. And this is really part of a new category of ETFs that emerged in the industry, whereby by using options, you're able to, in some cases, produce levels of income that are much higher than what you would get in traditional dividend-paying stocks or in bonds or in money market funds. So it's becoming very, very popular. And Yield Boost is just another sort of twist on this. It's a first-to-market product or a new category that we've established. And what it is high-yield based ETF that sells options. In our case, that's put options on leveraged single stock ETFs or leveraged ETFs on Tesla. That's the first product. And the reason for doing that is when you sell an option, there's a premium attached to that option. And the premium is a lot higher when you sell an option on a leveraged ETF. So therefore, you have the ability to offer higher levels of income or yield. But with Yield Boost, we're selling options that are slightly out of the money, and therefore there's also some ability to protect investors from the NAV decay that you can sometimes see with other products. So ultimately, it's a total return investment focusing on high yield, and that yield is coming from options contracts that have been sold on leveraged ETFs.
Oh, wow. Thank you so much for providing that explanation to us, Will. Now, my next question, with current inflation, interest rates, and global uncertainty in this mix right now, how does GraniteShares help these investors navigate these choppy waters, I guess?
That's a really good question. So when we started the company, I think one of the lessons from previous things I've been involved in is always to try and have a diversified offering. So when I set up the company, I wanted to have a diversity of product that we could offer really for all market environments. So regardless of whether the market was going up, whether the market was going down, whether inflation was going up or whether inflation was under control or interest rates up or down, we would have something that would be relevant and would perform well in that environment. And so that's what we've really done. And so we have what you might call counter-cyclical investments, such as gold or commodities, which are really designed in some respects to perform when the market is not performing well, or we've got inflation running high, or we have a geopolitical crisis that people run to safe haven investments like gold. So we have things like that to your equity or income investments where an investor might be prioritizing, for example, income or yield over stock market appreciation, and therefore is less worried about what's happening in the market, but is more worried about getting a steady stream of income. We have our leveraged single stock ETF family, which are super popular with people, and they provide typically 2 times leverage on popular stocks like Nvidia, Tesla, both long and short sometimes. And again, those are very popular with more short-term sort of trading orientated active investors who are looking to take short-term views on stock price movements over earnings season. I think this is very popular, and or big events like yesterday with the Fed announcement. And then lastly, as we talked about briefly, the Yield Boost family, which is a new family for us, introducing options-based income, so high yield ETFs that generate those high yields through options strategies. And so the Yield Boost Tesla, which TSYY, which is the new one, that's the first of a family of 20.
Your approach can definitely guide our viewers on finding some type of stability during these tough times. So thank you for providing that, Will. With so many options out there, how do you pinpoint what investors truly need? And how does GraniteShares tailor its offering in that response?
I think we've always tried to be different, and in many ways you could argue we have to be, because as an independent company, we're not owned by a big bank, we're not owned by an insurance company, we don't have those conflicts of interest, and therefore we also don't have those sort of massive distribution channels that you'll see with the larger or the largest asset managers or banks, etc. So we have to do something different, and therefore we've always tried to offer products that are unique, and or if they're not necessarily unique, they're significantly differentiated. So leverage single stocks, our commodity-based ETFs, now Yield Boost, they're all very unique and different products. So that's really what we try and do, is like most companies that offer a product range in whatever industry they are, you try and differentiate your product offering, offer something different, offer something unique to investors. And then, like I said, it's that ability to try and make sure that you have an offering that resonates really regardless of the market environment, and for different types of investors. If investors are looking for for leverage, if investors are looking for yield, if they're looking for more defensive, then you have something to offer.
Very interesting. ETFs started out simple, but investors now look for more tailored solutions. How is GraniteShares evolving its product lineup to keep pace with the changing investors' interest right now?
I think the way to think about ETFs is really it's just the superior technology that's replaced the mutual fund. So if you think about the world of mutual funds, you have thousands and thousands of mutual funds that have all sorts of different strategies. Huge amount are just very similar. And then the ETF comes along. ETF is like the new technology that replaces the old technology, which is the mutual fund. And like any industry, starts by providing exposure to the most well-known indexes or benchmarks. And then over time, what happens is you just use that new technology to effectively put whatever investment you want into it, because that's the technology of choice. So the industry's evolved to where it is today, where the ETF wrapper, as we call it, or the ETF fund, is really just a technological vehicle for offering all sorts of different types of investments, from the very straightforward plain vanilla, if you will, to much more complicated and much more sort of exotic investment.
Absolutely. Investors are exploring beyond traditional stocks and bonds. How do GraniteShares ETFs offer exposure to commodities or other alternative assets like you were just explaining before?
So we use the ETF wrapper again to offer those types of investments. So whether it's commodities, try and offer core commodity or core commodity family that has no K1s, for example. Those can be sometimes annoying for investors around tax time. So we have a commodity suite that are very low cost and don't offer K1s. And those have been very popular for investors looking from anything from gold to broad commodity exposure. And then, like you said, we have different ways of that people can get income, whether they get income from our HIPS ETF, HIPS, which is from a sector called pass-through securities, and those are things like REITs, like MLPs, master limited partnerships, business development companies or BDCs, and closed-end funds. They're all securities that don't pay corporation tax, so therefore you start with like a higher level of yields. That's a 10% plus per annum fund. And then you have the Yield Boost family, which is again trying to achieve high yields, but doing it through options income, which is a new way to get it. Increasingly, we see people are replacing fixed income allocations or some traditional dividend allocations with these options income strategies to generate higher levels of yield.
Wow, that explains how you help your investors diversify and help their holdings as well. Now shifting into a little bit of crypto and blockchain. As we're hearing it everywhere in the headlines right now, crypto and blockchain are moving into mainstream. Are you exploring these areas, and what could that mean for GraniteShares and its investors?
So we have a bit of a history with this, in that we were one of the first firms in the US to file for a Bitcoin ETF. And when we were rejected by the SEC, at that time we were a small sort of startup company, and we didn't have the resources. I didn't want to be in a fight with the regulator for potentially many years. So we decided to go in a different direction and build out the products that you see today. What we did do, however, was we decided to focus on crypto and or blockchain by providing exposure to the stocks, not the actual cryptocurrencies themselves. So we have, for example, in our leveraged suite, we have 2 times leverage on Coinbase, for example, or Cornell. In Europe, where we have a fairly significant business, we have strategies like MicroStrategy, Coinbase, Block, etc. So we decided to go that road, which actually has been a good thing for us, because as you probably know very well, the Bitcoin ETF market got crowded very quickly, and you have some huge names in there that pushed the fees down and made it very difficult for independent firms to offer something. So I think it's a space we still really like, a space we're still really interested in. But again, our sort of mantra has to be different. We have to offer something unique. And so really it's about now how to do that. I think there's some opportunities with the Yield Boost range to provide some yield products in the space. And then we'll look at, again, how we can offer more differentiated product going forward.
Wow, that's really great to know. We're hearing also about AI right now. AI can transform analysis and decision making. How might AI play into GraniteShares' approach to product design or even investor education?
So I think with AI, clearly we're in the early stages, I believe, of the fourth industrial revolution, which is AI. So in terms of the company, I mean, we are using AI probably in a similar way to most people, in that that's everything from the large language models, to help with, say, content production, social media posts, things like that, to using some of the models for analyzing data sets that we have in order to produce either just automate data processes or produce more insight to that data. So that's in terms of the company, and it's only going to get more powerful from here. But I think we've tried to be in front of AI as much as we can as an investment theme, and that's why we have funds in the market that offer anything from our DRUP or DRUP ETF, and that's a disruptive innovation ETF that we launched in partnership with NASDAQ, and that's the top 50 most disruptive firms or disruptive companies in the US. And that has a very interesting sort of screening process. So a lot of those companies are deeply involved in AI. And then we have just the straightforward, 2 times levered ETFs on companies like NVIDIA, like Taiwan Semiconductor, like AMD, and all sorts of others that are in the AI, either directly involved in AI or indirectly involved, like the Microsofts or the Metas even.
Wow. By discussing AI, you show that your toolkit for innovation is ever evolving. So thank you for that. Beyond returns, many investors care about sustainability and social impact. How are you integrating these values into your ETF offerings?
It's something that we're clearly aware of, but it's not something that we have prioritized really as a firm. So I view our sort of philosophy as really providing exposure to different sectors, different products, but ultimately you're going to provide exposure to things that people want. And I think with the sort of sustainability ESG, well, they've been under a lot of pressure over the last few years. And it's not really been clear to me, what the value add that we could offer in terms of that space. I'm certainly aware of the trends, but I think it's had a bit of a black eye over the last few years. And so I think if there's demand for it from investors, we'll certainly look at it. And that's really our job to do so. But otherwise, it's more for us just focusing on the investment strategies and what customers want, and that may or may not have some kind of sort of ESG mode to it.
Understood completely. ETFs can still feel a little complex for newcomers. How are you helping new investors understand your products and feel confident in using them as well?
This is a good question. So I think, look, we're like any firm, open to people asking questions, looking for information. We try and provide as much robust information as we can on our website and through the educational materials, etc. There's a lot of good information just online, just more broadly. Folks like yourself providing good information out to investors. So it's never been easier for investors to access good information if they look for it. But at the same time, we always have to be conscious about the suitability. And I think for investors for the first time, a number of the products that we offer, for example, wouldn't be suitable for that. That if you're talking about leveraged ETFs, even some of the high yield options ETFs. I think I would prefer it if people were, more understanding or be able to understand those strategies first. So I think if you're a first time investor, it's best to stick to things that you understand and maybe are less risky. So for example, that could be anything from broad bond index ETFs or broad equity ETFs on major indexes like the S&P 500, etc. But ultimately, people's appetite for risk is going to be different depending on who you are, your level of understanding of financial markets, etc. And yes, of course, there are products that we offer that would be suitable for first-time investors. But I think the majority would be more for investors who are comfortable with markets, comfortable taking risk, and understand some of these strategies that may be a little bit more complicated than your regular sort of plain vanilla ETFs.
No, and that absolutely makes sense, especially for the various different types of investors out there right now. So your guidance is extremely appreciated. Reaching a broader audience right now often involves partnerships. Are you guys exploring any collaborations or new channels to expand GraniteShares' reach?
We're always, as we grow, I guess we're always expanding the levels of partnerships and people that we work with, and sometimes that means new distribution channels as well, new markets, etc. So it's always something that we're looking at, and just comes with, I guess, unlocking more levels of assets or more products that are available to certain audiences. So it's something that is always a focus.
Absolutely. Investors are thinking globally now. What does GraniteShares' international outlook look like, and which regions interest you the most?
So we have, I guess, some perspective on this because we operate globally. So we have a business in Europe where we're active in most of the European markets, the major European markets. We're also active in Asia as well. We have presence in Asia. So we have a good global perspective. I think that I would sort of summarize by saying there's no doubt that there are markets around the world that, for example, stock price valuations are lower than what you find here in the US, generally speaking. But I think you have to ask yourself the question, are they lower for a reason and not just because it's a sort of discount that's ready to close? I'm personally very positive about the US market and the prospects for the next few years. I think the US has been the place to invest over the last few years. And that has come at cost for those who have bought emerging markets or have bought European stocks or some other markets around the world. And I don't really see the catalyst for that changing, certainly in the next few years. So I think the US is certainly where you want to be. And to the extent that there are global opportunities, I think they'd be more tactical. As we all know, China's had a lot of problems. There's a lot of people that put money into China. And ultimately, you're betting on a turnaround story in these markets, which may happen. But I think the trend of US strength and US growth will continue.
Wow, that's exciting to hear for right now in this moment at the United States. With constant market chatter, how do you keep GraniteShares focused on core goals while adapting to new developments?
I think it's the challenge of running any business is about making sure that you're always sort of pushing the ball forward, and that for us is a lot of different things going on. Like I said, we're a global business, so we've got activities going on in Europe, we've got activities going on in Asia, as well as obviously here in the US. So really just trying to be focused, trying to stay core to the goals that we have in terms of growing the business, growing the amount of products, growing the audience, and making sure that we're sort of maniacal about that growth and that conviction every day.
That's great, and that's incredible. Trust, inspiring, and everything for credibility for GraniteShares that you just shared with us. Thank you. Now, for those hoping to break new ground in finance, what lessons from your own would you share about your journey?
Well, I think one of the great things about finance, it's still one of the industries where you're really able to start doing many different things, but are able to sort of move around or switch different career paths within, ultimately to get to a particular specialization or area of the market or something that you would like to work in. So I think it's still a great industry for people to join, and it doesn't matter what you start doing. I think there are huge amounts of opportunities to move into different, like I said, different sectors of the market, different parts of the industry, and have different specializations. So I think the good news is I wouldn't necessarily obsess with thinking that you have to get your sort of first role right every time. It's much more about getting a start and getting an opportunity, and then learning the business, and from then you'll have opportunities to specialize or prioritize one particular part of the market over another.
That's great advice. That's great advice. Is there anything right now in this moment that is exciting you?
Look, I'm biased towards asset management. I mean, that's the industry that I've been involved in for the vast majority of my career. So I think that asset management is just something that is on a growth trend. It's been growing since I started in the business, and will keep growing. And there are a number of huge sort of super macro trends supporting that. Most importantly, the baby boomer sort of assets, within the market, just wealth more broadly around the world, is increasing all the time. So that needs a home. And, I think the asset management industry is something that is very, rewarding kind of over the long run.
Absolutely. Before we wrap up, where can viewers find out more information about GraniteShares, Yield Boost, and your broader product range of what you guys offer?
So our website is the best place really to start, and that's graniteshares.com. So you'll find all of our products, educational materials, anything sort of official, prospectuses, fact sheets, etc. They're all on that website. And then for more news and updates, we have a Substack, which is graniteshares.substack.com. I encourage everybody to sign up to that Substack if you're interested in financial market content. We have a YouTube channel ourselves, where we run our own podcast called the High Conviction Podcast. And then we have the social channels, GraniteShares or myself at Will Rhind on X, on Twitter, and the company GraniteShares ETFs on X and Twitter.
Thank you so much. Well, we'll make sure to provide all of those details in our description below this video so everyone knows where to locate you. Will, again, thank you so much for guiding us through GraniteShares' vision, the potential of Yield Boost, and how you're responding to today's market challenge. Your insight makes the evolving world of ETFs feel more approachable and exciting. And to our audience,
thank you so much for having me.
Thank you. And to our audience, thank you for watching. Be sure to like, comment, subscribe for more information, discussions, and stay savvy. Bye now.
SIM swap fraud is sweeping the globe, and your mobile security is at risk. Switch to Efani and lock out SIM swap fraud and get the most elite mobile protection in the world. Efani guarantees 100% protection from SIM swaps, backed by a $5 million insurance policy. Stay secure with reliable coverage, free international roaming, and unlimited data. Trust Efani to keep your communications and assets secure. Get military-grade protection, 24/7 concierge service, and a hassle-free upgrade. Click the link below for $150 off. Thanks for watching. Help support this channel and receive exclusive offers from one of our partners located in the description. We'll see you on the next one.